in Forex trading. Success doesn't just come from making trades, it comes from making well-informed, data-driven decisions. And the best way to ensure that your trading strategy works is by In today's video, we're going to dive into how to test your EMA and RSI setup for consistent profits using popular platforms, interpreting results, and optimizing your strategy settings. Step 1. Choose your backtesting platform. The first step in backtesting any Forex strategy is to choose a platform that supports it. For this tutorial, we'll use MetaTrader, Mount 4, and Trading View of the most popular platforms among traders for both Forex charting tools and support for automated testing. Choose whichever platform you're most comfortable with or the one that best suits your needs. In MetaTrader 4, you'll find the strategy tester in the view menu, and it allows you to backtest your strategy with historical data. In TradingView, the process is more manual, but you can replay price action and check how your strategy would have performed. Step 2. Set up your EMA and RSI strategy. Once you have your platform ready, it's time to set up your EMA and RSI strategy. Start by adding the exponential moving average EMA to your chart. A good starting point is the 50-period EMA to capture the medium-term trend, and the 200-period EMA for a longer trend. These two will help you identify the overall market trend. Next, add the relative strength index, RSI, to your chart. The RSI is typically set to use it to measure the strength of the trend and identify overbought or oversold conditions. Set the overbought level to 70 and the oversold level to 30. This will help you identify potential reversal points. Step 3. Define your entry and exit rules before backtesting. You need to clearly define your strategy rules for entries and exits. Here's a simple example using the EMA and RSI combination. By signal, when the price crosses above the 50-period and the RSI is below 30, indicating the market is oversold and due for a reversal. Sell signal, when the price crosses below the 50-period and the RSI is above 70, indicating the market is overbought and may reverse downward. For exits, you can use a fixed stop loss and take profit based on your risk to reward ratio, or you can use the 200-period EMA as a trailing stop, moving it to lock in profits as the trend moves in your favor. Step 4. Backtest your strategy. Now, let's go to your platform and select the historical data for the currency pair you want to take. If you're using Mount 4, select the time frame, choose the strategy tester, and hit start. The platform will automatically simulate the trades based on your defined strategy and show you the results. In TradingView, use the replay feature to manually go back in time and simulate the trades. As the price moves, mark the points where your strategy would have entered and exited the market. Step 5. Interpret your results. Once you've run the backtest, it's time to interpret the results. Look at key metrics like total profit, loss. How much did the strategy make over the period you tested? Win rate. What percentage of your trades were winners? Risk to reward ratio. Did your winning trades make significantly more than your losing trades? Drawdown. What was the worst peak to trough? Loss. This will give you an idea of the risk involved in your strategy. Look for patterns or areas where the strategy performed poorly. Did it fail in trending markets? Did it perform well during reversals? This is valuable insight into where your strategy might need adjustments. Step 6. Optimize your strategy. Now that you have the results, it's time to optimize. The key to consistent profits is refining your strategy over time. If you notice that the RSI is too slow or the EMAs are too wide, experiment with different periods. For example, try using a 20-period EMA instead of a 50-period for faster response to price action. Experiment with the RSI. Periods sometimes adjusting it to 10 or 7 can provide more responsive signals. You can also optimize your risk management. Maybe your stop loss is too tight or you take profit too far. Tuning these settings can improve the performance. Step 7. Forward test your strategy. Backtesting is important, but forward testing is crucial for seeing how your strategy performs in real-time market conditions. Start by trading with small lots or a demo account to verify your strategy's performance. By forward testing, you can refine your entry, exit points further, and adjust the strategy based on current market conditions. Step 8. Keep improving. Backtesting isn't a one-time event, it's a continuous process. As market conditions evolve, so should your strategy. Keep track of your trades, analyze your results, and adapt to any changes in the market. The key to backtesting is patience and consistency. The more data you gather, the better you'll understand how your strategy works in different market environments. With time, you'll be able to optimize your EMA and RSI setup for long-term success and consistent profits.